A very warm welcome to you. Many thanks for finding time to join us on this week's edition of Almond Finance and Wealth Report. We remain your source for all the latest happenings in the world of business. My name is Lucy Ulugbe. On our lineup this week, first we join Faith and our guest, Professor Segun Ajibola, a professor of economics at Babcock University, on the CEO Rendezvous for the exclusive session on the impact of the COVID-19 pandemic on the economy, the banking sector in perspective. Speaking in the course of the interview, Professor Ajibola said that there is a disconnect between the regulator and operators in the banking sector when it comes to the disbursement and use of intervention funds in Nigeria. Do take a listen.
But the question with intervention fund is this. If you ask me, you pass on funds to me, either as for textile industry, either for agric, either for aviation, either for entertainment, and so on and so forth. And ask me to on-lend to operators in that sector. The question is, who bears the risk of loss? If the risk resides in me, as we have been discussing since, if the risk resides in me as a commercial bank, then I will not just accept your instruction on the face of it. I have to do my due diligence. But what we see in this environment is like a sort of, there's a compelling directive to say you must lend this to agree, you must lend this to
entertainment.
And when the thing goes bad, it is the bank that bears the brunt. That is the disconnect in the use of intervention fund here.
On this edition also, we will bring you highlights from the media interaction of the Nigerian Insurers Association, NIA. The chairman, Mr. Ganiu Musa, who is meeting insurance correspondent for the first time since he assumed office, said that insurance operators are on board with the regulator on the recapitalization drive. However, there is need to review the current insurance legislation because it is outdated. Take a listen.
I fully agree. The main issue, which is the problem, the constraint, is the fact that the current insurance legislation is outdated. It's made it impossible to do the sort of things that needs to be done, even in terms of the proper definition of capital, which is what now takes me to the second item that we've been working on in the past, I don't know, is it 7 or 8 months now, which is working with the National Assembly to modernize the primary insurance legislation.
Plus, of course, all the other extras we bring you each week on the program. So sit back, relax, and enjoy the lineup. Details in just a moment. Please stay with us.
What takes your anxiety away?
Access to medical care without financial constraint.
Assurance of a cover for my car and I.
Keeping my family protected despite my low income.
Knowing that my goods are secured while in transit.
Not having to worry about the pain and the bills at the same time.
Having my investments secured.
No matter what safety means to you, we provide you with a covering to keep you and all that matters to you safe.
Consolidated Hallmark Insurance PLC. Anxiety away. Value assured.
Okay, Prof, you do know the issue of sanctions, because you find that, and I'm beginning to see in the financial services sector especially, is like over time, players in that sector get to a comfortable level where sanctions from the regulator doesn't really, it doesn't hurt a fly, as they say. So if, as you said, if a bank is willing to say, oh, it doesn't matter what sanction I'm giving, I will hide this information. I don't want the other bank to know that this customer is having deposits in my bank. What happens? Because we've seen over the years, regulators, they give sanctions, rules. People still break the rules anyway and face the consequences.
Yeah, they break the rules and face the consequences when the sanction is infinitesimal compared with the benefits derivable from breaking the rule. We used to ask ourselves in those days, if by breaking the rule, I can make 10 million, and at the end of the day, I pay 1 million sanction, net, I've made 9 million. But if I know that I can make 10 million by breaking the rule, and when I'm caught, I pay 15 million. If you see our rules and regulations, even our laws in this environment, some of them are so, until very recently, we were relying on evidence law of 1948. So you will see some laws as of today that will be imposing penalty of 100 naira. 100 and that's 100 naira maybe when 1 naira was 200 when 1 naira was $2.
$2 1 pound.
So you will see some of those provisions, but I think things are changing. So if we are, generally, as somebody have, and as I've always been saying, the fraudsters in our midst, they are always a step ahead of the operators. The operators themselves are always a step ahead of the regulators. If it had been the other way around, it would have been a different story. But because that is the way it has always been, that's why most of the policies are reactive rather than being proactive. But today, some of the new regulations coming out of central bank, they have another regulatory authority, they have very, very stiff sanctions. Sanctions that will make you think twice before breaking it. And some sanctions can even lead to loss of position, either as managing director or executive director or non-executive director or top management, can lead to loss of position, can lead to monetary sanction plus prosecution. Those are the things we need to instill sanity in our business life in this country, not only in banking, generally. But when sanction is so
on the wrist.
Exactly, they just look at it and wave it aside as if it's nothing and continue as business as usual. That must not happen, and that's why the sanctions stipulated in the GSI is sufficiently stiff to curb untoward practices.
Okay, Prof. Now let's move on to the CBN. Everybody pretty much expects the CBN to solve all of the nation's problem by way of interventions. You hear those in the agri sector, oh, we need intervention of CBN. Those in maritime sector, we need intervention. These need intervention. These need intervention of the CBN. And sometimes, in fairness, the CBN make efforts at, balancing, striking a balance with all of these interventions. But you also hear some economists say that, the Central Bank of Nigeria is not a donor agency. So why are they involved in so many things? So I just want your thoughts on that, especially at this time of the pandemic.
See, Central Bank juggles with a lot of balls, and they don't want anyone to drop. The main responsibility of a central bank is to ensure stability in the economy. Price stability, growth stability, liquidity, and so on. But in the process of doing that, we've had problem of what is often referred to as fiscal indiscipline. Central bank will say, let's go this direction from the fiscal side, which is politically motivated. That policy, however novel, however good it is, will be rubbished. Then we start grappling with the problem. That's one. Two, central bank itself has dabbled into some things that used to be the exclusive preserve of the operators, that is deposit money banks and others. It is not business of of a central bank of any country to lend directly to beneficiaries. It is not. So that is why some have criticized central bank for going into retail banking. That is, it's confusing because you cannot approbate and reprobate at the same time. You cannot be a regulator and at the same time be an operator. Then the question arises, who audits the auditor? Who inspects the inspector? Who examines the examiner? And who supervises the supervisor? So that issue is on ground. That should central bank go into this kind of direct rapport with some end users in Nigeria, either be it through an anchor borrowers program or any other scheme of that nature, then the NISTRA. But now central bank is also trying to use the channel of intervention funds. But the question with intervention fund is this: if you ask me, you pass on funds to me, either as for textile industry, either for agri, either for aviation, either for entertainment, and so on and so forth, and ask me to on-lend to operators in that sector. The question is, who bears the risk of loss? If the risk resides in me, as we have been discussing since, if the risk resides in me as a commercial bank, then I will not just accept your instruction on the face of it. I have to do my due diligence. But what we see in this environment is like a sort of, there's a compelling directive to say you must lend this to agree, you must lend this to
entertainment.
And when the thing goes bad, it is the bank that bears the brunt. That is the disconnect in the use of intervention fund here. Intervention fund is okay. You ask them to price it, single digit, maybe maximum 9% and so on and so forth, to reduce their cost of operation. But when things go wrong, like you said earlier at the beginning, no business, this time last year, no business was projecting forward into 2020 with COVID-19 in mind. COVID-19 has come. Even the borrower with the best of intentions might have problems.
Yes.
When that happens, who bear the brunt? Who bear the loss? If all that central bank is prepared to do is just to debit the banks, because the customer has, due to no fault of his, run into crisis, then we have not gotten there. Risk management is a key element of banking, especially in the area of lending. So if I bear the risk, then you have passed to me the duty of care in whatever I do with your money, because it's no longer your money. It's your money. It's my liability.
Moving on, as we come around, let's talk about the last round on the central bank efforts on unification of the exchange rates. Is this the best solution for Nigeria? Then the second aspect of it is this the right time for this policy implementation? Because many have said that the timing is nothing short of the CBN trying to deplete our struggling external reserves in a bid to continue to defend the naira.
Foreign exchange management is another hydra-headed problem for any regulatory authority in the business of banking. We keep talking about unification. I don't know what it means, honestly. Because let's take the last 20 years, for example, or since 1986. If official exchange rate is 50 naira to $1, and the unofficial is 70 naira, somebody will say, I want to unify, so I want to take the official to 60. The following day you will wake up, the unofficial has gone to 80 or to 90. To save time, look at what is happening now. Central bank moved the official exchange rate to 379, 380 a few days back. The unofficial market is talking about 460, 470. When the rate was 360, when the official rate was 305, 306, the unofficial was 360. Now, so where is the unification now? One is at 380, the other one is at 470. And my fear is if central bank wakes up now to say tomorrow, to say official has become 450, we may be looking at an official of 550.
550.
So the game of unification is more or less a game. As far as Nigeria is concerned, there is no regime that has won that battle or that has succeeded in the unification.
In your opinion, Prof, why is it so? Why is this such a tough?
It's question of demand and supply. You know, the position of a country in terms of the foreign exchange reserves determines the respect and the recognition accorded to that country among the Committee of Nations. There are even some scientific ways of determining the state of health of your economy based on your foreign exchange reserves. And a very simple one. Your foreign exchange reserves must not fall below your 6 months import bills. In other words, if as Nigeria, we import on the average $5 billion worth of goods and services, all categories in a month, then we must at any point in time have 5 times 6 billion dollars in our foreign exchange reserve position. If it falls below, we start having problem with our trade partners. That what happened to Nigeria in 1984-85 when the General Babangida regime eventually introduced a structural adjustment program in 1986 to correct that. We lost our creditworthiness among the Committee of Nations because I think as at that time, our foreign exchange reserve was barely sufficient to cater for our 3 months import bills. So that's when, as at today, we are still struggling with that, and our trade partners are asking for cash and carry business. So that is the implication. So there is limit to the extent central bank can go to bring out money from the foreign exchange reserve to defend the value of naira, because they must not deplete that reserve below certain level.
Well, Prof, as we said, this has been a recurrent problem, regime after regime, administration after administration, even central bank governor after central bank. So how do you foresee us ever coming out of the woods when it comes to the issue of foreign exchange?
We can come out of the wood. You know, for quite some time now, we've enjoyed relative stability in the value of our currency. But then we got the shock when the price per barrel of crude oil went as low as $21 and so on. And that accounts for about 90% of our foreign exchange earnings. So that affected our foreign exchange reserve position.
On that note, sir, I'd like to say a very big thank you, Prof.
Thank you
for
very
always
much.
finding time to talk to us on the program and educate a lot of people on our topic of discourse. Thank you so very much, sir.
Thank you very much.
All right, welcome back. Moving on, we now bring you highlights from the Nigerian Insurers Association Media Parley that took place recently at the NIA Secretariat on Ikorodu Road, Lagos, where the chairman highlighted some of his achievements in office in the last 1 year. Happy viewing.
Industry, we fully support, the proper capitalization of the operators. There's no doubt about that. part and parcel of our own agenda. But what we also support is the fact that it should be done in line with best practice. And the interesting thing is that we actually do not disagree with regulator, contrary to the impression that may have been created. We fully agree. The main issue, which is the problem, the constraint, is the fact that the current insurance legislation is outdated. It's made it impossible to do the sort of things that needs to be done, even in terms of the proper definition of capital, which is what now takes me to the second item that we've been working on in the past, I don't know, is it 7 or 8 months now, which is working with the National Assembly to modernize the primary insurance legislation. Again, you are aware of the developments with the Consolidated Insurance Bill, which again we're working together with NICOP to ensure that the final law that comes out provides the basis for our legislation to be able to respond to the legislative environment of the 21st century. And because we've had a number of engagements with the regulators, we've come to understand that the constraint that they actually have is the law, which is what we're now working together to try to debottleneck. We are aware that it's gone through the second reading. We've had the public hearing on it, and it's now going through. The process of lawmaking at times is very cumbersome and takes a long time, because apart from just operators and the regulators and the brokers, there are a number of other stakeholders that came in for the public hearing to make their own presentation. So now they're going through the process of reconciling all the positions, and hopefully we'll now be able to get it to the floor of the National Assembly.
I want to find out the update on your USSD, your star 56611 hash. 56511 hash. Where are we? Where was the update? What are they doing? What are we getting? Any positive impact in the industry? Then finally, I want to talk about your rebranding project, which the insurance industry spent over 300 million. Surprisingly, we are yet to know where you are. Remember the last time we met at NIA, you said the NIA, the committee that was in charge said they dropped it, they suspended it, now they are coming back. Is it that the 300 million went just like that down the drain without getting anything?
How has the business situation been? And then you mentioned the plan by the NIA to either suspend or expel. I'm sure you just want to expel them from being members of the NIA. How does that affect the real issue? That how does it help the industry in terms of if a company has done damage or some company have done some damages, you expel them from NIA. Has that solved the problem?
There are various levels of intervention. Unfortunately, based on our constitution, is when you have completed everything, not just on suspension but on expulsion, that you can now go public with the names. I'm sure you will understand the sensitivities of outing names of individuals that are still going through the process until that process is completed. So we will not be in a position to give the specific names now, but I can assure you we're much closer to the end than the beginning for a number of them. Once that is completed, which I expect should happen in a matter of weeks.
That's our time on the program this week. Many thanks for being a part of it. Join us again, same time, same station next week for a fresh package. In the meantime, feel free to connect with us on all our social media platforms. Visit our YouTube channel, I'm on Finance TV. There are tons of videos of exclusive interviews, major events in the financial services sector from within and outside the country for you to watch. All you need to do is subscribe. Many thanks again for your time. My name is Lucy Lugbe. Please stay safe. Bye-bye.